Okay, Warriors, who's ready for another week of market history? I don't think so, Richard. How you doing, Mike? I'm echoing. How's everyone doing today? Brian, how are you?
Yeah, all good, mate. You?
You sound like nothing's happening. So I'm glad you're here. I want to start with this question. Hi, Simon, everybody. To me, this feels like intervention. Was the BOE in there to bring it
No,
back?
no.
No, that was
No?
the machines overnight stopping everybody out.
Okay, but what brought it back?
Reality.
Really? Okay. All right. They wouldn't
Yeah,
announce it anyway.
it was an illiquid time of the night.
Okay.
There was no headlines, no nothing behind it. Market maybe tried pushing some buttons to see if they get a reaction out of the BOE or anyone else. And as you can see from the bounce back, we're back to pretty much unchanged.
And we got to Stel's objective that you probably had like an hour to take it at 92 or maybe less, huh? So, great macro call that you would have had to been, I don't know, like a ninja to get it. Oh, you could have had a resting order in there, right?
Yeah.
So at 92.
We were talking about it this morning. Should have had an order up there, but anyway, it's okay.
Ryan, I'll reiterate. I have a bet here for you. We had this conversation on Friday, right?
You can just bet in the market, right?
So,
I mean, if
you always have somewhere to stay. Don't worry about it.
What's the weather like?
2 days in a row.
The weather is lovely, as you know, in Greece.
Hey, you had snow last year.
Yeah, for just a few days. Don't worry about it.
So potential reversal in gold, I know got to a lot of targets that some of the bears were looking for. I don't think I remember last week Greg had said 1600, but there were some wave extensions at 1630. So pretty good recovery in gold so far. And you know what? Where silver held today, Stel? I mean,
where?
That's right here where it held 18.5. That's a nice buy zone wrong under the lows. I mean, if you missed this wave, wouldn't you say that this is still a correction to buy? And if gold, even with gold breaking the new lows, so if silver could hold up with gold going to new lows, what happens if we get a reversal in gold?
We're definitely getting to levels which are going to be amazing to buy. The question is, where do we stop before we reverse?
Well,
that's a $1 billion question.
There is no answer, and there is no answer until the rearview mirror.
Yeah.
Right. So I don't know. I'm trying to live in the future. Back to the future, everybody. So and also here we are, right? S&P's testing the June lows, right here. Sure looks ugly. I mean, Richard's greeting this morning was, "Welcome to the apocalypse." I don't think we're in an apocalypse yet. I mean, but I do think the currency markets are disorderly now, and I don't know. Just maybe it's a vibe, or maybe I'm talking my book. Especially if the yen makes new highs after their intervention. I think that the central banks are going to get together and do something.
Well, yeah, and good morning, guys. Good morning, Dale, Coach.
Do you think so, Blake?
That
was
my segue for you.
Well, I was just listening to what you had to say, and I just saw that Live Squawk is just saying that the Bank of England might still trying to decide if it's going to comment on the sterling. I mean, I want to ask you guys. I mean, what do you think? What do you think, Ryan? What do you think, K-Man? Do you guys think that the Bank of England should step out and start verbally intervening here? I mean,
it costs nothing to jawbone.
Is down like what? I mean, percentage wise in the last couple of days. What are we talking as far as the pound coming under pressure? I mean, we've lost, and I'm gonna just, so I got my numbers right here. Within the last week, we've lost 10% in value. Obviously bounced back a little bit here, but that's a big move for currency.
That's disorderly.
It is
Well,
disorderly.
to answer your question, should they? No. Will they? Probably.
Okay. Well, why? Okay. So why do you say they shouldn't? Why would you say they shouldn't? I'm just asking.
Two
for a
reasons.
friend.
It'll probably create more panic because it's acknowledging that there's something wrong, and two, it's be destined to fail. What are they going to do? Talk it up?
Yeah.
When was the last time such an intervention was successful?
Exactly.
That's the thing.
Why would verbal intervention have
cards.
any? Why would verbal intervention have any results? You want to
Exactly.
intervene? There is a very direct and guaranteed method to work. You raise interest rates by a lot more. That is guaranteed to do the work, and at the same time help with inflation, right? Because at the moment, not only the UK has probably the worst inflation problem among the bigger countries, but obviously with the recent days of devaluation, that inflation problem is going to be exacerbated. Of course, it's not going to show up in the data immediately. It's not a day-by-day thing, but in a month or two from now, that's going to show in inflation, which is going to increase even further.
Let me ask you the question then. The pound's being sold because the market isn't trusting of the government's plans on raising taxes. So it's already doing the effect of raising interest rates on what debt they're going to have to borrow extra to fund those tax raises. So the market's negative on that. How does doing a massive rate hike help that? It makes it worse.
What do you mean? It doesn't make it work. Currently, it's like having a couple of it's like having 2-3 diseases, one of which is cancer, right? If you don't fight the cancer issue, the rest of the diseases don't really matter because cancer is going to kill you. So at the moment, it's a snowball effect. The devaluation of the pound is going to, by definition, exacerbate all the rest of the problems, right? So first, you need to put an end to this, uncontrolled, because for a currency of a G7 country, this is almost an uncontrollable devaluation that we're seeing now, right?
It's like when Soros broke the BOE.
You're seeing it everywhere. You're seeing it everywhere.
Like the Soros.
Okay, I got my original question answered by Ryan. The Bank of England should. Oh shoot! Now I forgot what I even asked. What did I ask?
You asked.
No, because Steve took.
You
off,
asked if you should verbally. You asked if they should verbally intervene.
So, K-Man, what do you think? Do you think that the Bank of England should intervene here? Do you think that they should verbally intervene? Do you think that they should make a statement?
Good morning, everybody.
Good morning.
Good morning.
In my opinion, should at least let the market know that they are looking at it and looking for ways to stop the rot.
There is one way to stop the rot.
Well, right, we understand what your opinion
is.
Which
way? The question was, should they come in the markets or should they say something?
No, he asked about verbal intervention.
That is, yes, they should tell the markets that they are hands-on, at least. I mean, the problem with Bailey is that every time he opens his mouth, cable goes down. So
I mean, you've been on trading desks in Japan for years when there's been intervention around. I mean, there's actually, like, the BOJ, they have actually intervened this last week, but checking rates is another example of them saying, hey, look, we're as you pointed out, we are hands-on. It would send a message to the market if the Bank of England said, we are actively watching this, because right now they've been silent. Am I missing something? Unless I've missed some commentary.
They actually exacerbated the move by their incompetence so far.
Okay.
Because Bailey, actually, we were talking about that in length on the Flow show. It's not a today's problem, right? And it's not only a Truss and Kwarteng's problem. It's been a problem going on for months. Look at the dollar has been strong, but look at the sterling versus various other currencies. Even
and here's the euro sterling.
Bank of England has an issue, and Bailey is part of the issue, in my opinion, by having the markets panicked in the first place, where he said we're going to raise the rates, we're probably not going to sell assets straight away, and I think we're in for a recession. Things are going to get worse. And that's where the sterling started to be sold off, and that's quite a while ago. And now today is just the big flush. But should they say that they are hands-on? I think so. And if you ask me if they should do something, yeah, probably it would be a good thing to raise rates. But will interventions work? We have seen with the Bank of Japan what it is, or the MOF what it is. If you do uncoordinated interventions,
That's a key word.
Exactly.
It is
Yeah.
not
Interventions are just
from weakening or strengthening. So
Yeah, okay.
interventions are just weakening the FX reserves of a country. They have a very, very short-term effect, if any, because on occasion they don't even have a real effect.
How about the Plaza Accord, Steve? Did that have a short-term effect?
37 years ago.
No, but that's
That was and so getting coordinated effort among central bankers is going to be really interesting, and it's going to be
They're going to have to, Blake.
well, I mean, look at let's take a step back and look at the dollar index, just so everybody's clear where we're at, and this is from
You said this could happen weeks
well
ago.
we're at channel resistance here. We're
114 you were talking
pretty extreme. I mean it's scary, right? Everybody around the world is feeling the wrath of the dollar at the moment, everybody. And I mean, we just continue to just push out our inflationary pressures, so you guys get to take it. So that's everybody else. And I don't know, at some point, the dollar is going to I think the dollar is going to there's going to have to be some sort of intervention effort amongst central bankers, like a joint effort. I mean, I don't know, how close do you guys think we are to something like that? I mean, I don't think we're that close, to be honest.
I agree with you, Blake. I agree with you, Blake. I don't think we're that close.
No, and
Closer than last week.
What's that?
Closer than last week. We were saying it all last week. The risk is growing that there's increased comments, increased rhetoric from countries and governments.
It's already been done.
Yeah, but how close are we, do you think?
At the beginning.
Still
the
far.
only one important in this whole stuff is the US. If the US says it's enough, or if Powell says it's enough, then it will probably be enough for a while. But I don't think we are reliving a Plaza moment, because there are some big differences in what we are seeing now. And
that was to strengthen the dollar, though, right? It was falling.
No. The Plaza was to weaken the dollar, and the Bundesbank sold an absolute megaton of dollars that day. Dollar market went down from 350 to something like 312 or 308 in one session.
Okay. The best chart is watching the yen,
which was less than 2 years later to buy dollars.
Yeah, if I could get a dollar yen, like
why couldn't that work again? Why couldn't that work again?
There we go.
Because I'm not sure whether the US is ready to support all of the currencies.
Right here.
There's a difference
right here.
Selling dollars and buying all other currencies, right? There's a big difference in that.
Yeah.
Wasn't that the Plaza Accord wasn't that what year was that? I don't know.
1985.
Yes.
September 1985.
Yes, right here.
September.
Yeah, that led to the crash of 87 because rates spiked, right? Because the dollar was falling.
Yeah, I mean, that was that was it. Yeah, I thought it was the move from 300, but I guess it wasn't. It's been a long time since I've looked at those charts, but as you can see, oh, well, look at the dollar yen. It's almost actually reaching longer term targets. We still got a little ways to go. Speaking of which, dollar yen, let's shift our attention over there. So what happened with I lose track of all the finance ministers and their comments, but they basically said that they're not going to intervene at some number like 145 in the dollar yen. And the dollar yen actually moved higher right after those comments. We went from like 143. I was watching it. We were at 143.70 to 144 and change right after that. But basically that's Japan, saying, hey, we're not looking at any specific level, but we are still, but it's still, they still are intervening. It just doesn't, there's not a level that they're trying to defend, right?
Yeah, but it's again, those comments were made by an ex-MOF guy. We cannot make the mistake of taking ex guys into real consideration. Sakakibara said that they wouldn't intervene either, and they did. I mean,
okay. So
the
this,
real
and
MOF
that's great.
people,
That's
the real
great that you
MOF
point that
people,
out, because I didn't catch that part of it because the
Okay.
market was moving so fast.
Okay, the real
That was at the
MOF guys,
time.
they are
That was
still
at the
saying they
time
will
that the
intervene,
sterling was
but-
actually breaking down. So
Yeah, okay,
Yeah.
but then against that, you have Kuroda coming out saying that they still won't change, because if he said literally this morning, if we widen the YCC band, it would be the same thing as making a rate hike, and we are not ready to do that. So that's where your real slower than in other currencies, but your real move in dollar yen or in yen comes from again today.
Well, let me ask you guys this, and we'll go around the horn, and let's start. Have we even heard from Stelios?
Yes,
Of course you
A
have.
little bit. Yeah.
What?
Come on,
oh, I didn't
man.
even hear from him this. Hey, good morning, Stel.
Hello, good morning.
So let me ask you this. What do you make of all of this? The intervention efforts. Do you think we're going to get some sort of coordination among central bankers?
I said last week, remember on Friday, I think, and I wrote on the chat as well, the way things are going and the way things are precipitating, I think that chances are rising that the central bankers are going to get together and try to organize some kind of, I don't know what they're going to do, but try to stop this this path which is going one way. And I think we can all agree that the world cannot live with a strong dollar for too long. That's been proven time and time again. And the dollar is going to the moon. So nobody wants that. Even the US, they don't want that. And emerging markets definitely don't want that. So
I'm not sure about the US currently, Stelio, with this current set of circumstances, because don't forget, politically speaking, right, the Biden administration is not doing really well. One of the reasons, of course, is that people are pressured a lot by inflation, and a strengthening dollar is definitely a big remedy to the problem, right? It's definitely helping a lot in that right direction.
For imports, for prices for
inflation, yes.
But
because
still,
they run a big trade deficit, right? So
yeah, but a strong dollar is invariably causing risk to sell off, right? And this is going to ripple everywhere too.
I think the trickle down effect in the United States is going to be big. I mean, most people and most wealthy people, their portfolios are really being affected by the slowdown of risk, and on top of it, now you got the housing market is completely slowed down as well. So I want to point this out to everybody, and thank you, Stelios, for your comments here. We are getting really close to new lows on the year. I mean, very, very close. I mean, these lows are right here. Something I pointed out on the week ahead video is that the breakout point, the major breakout point is you can see it. I have it in multiple dotted lines. My charts don't change. You guys are around. You guys have seen these charts for a long time. I very rarely change like these charts, but you can see that level comes in just below 3,600. And I pointed out, just in case we break into new lows this week, I think that there's some support that, if you look further left and you realize the price action from the big breakout when the S&P actually broke out to the higher. This is post-COVID lockdown move. If you're just be really careful not to be, I guess I want to say this, not to be chasing markets and risk lower, because these are dangerous levels. Not saying that we can't go lower. I'm just saying that you got to be careful chasing risk off type of moves, just knowing that around 3,600 there's a lot of support down there, which I think the market looks like it's at least going to test new lows, if not trade much lower. I mean, a lot. It could definitely break down, but I'm just saying looks like we are going to visit this area in the markets, I would assume. So Dale, we haven't really heard your opinion here on intervention. What do you think is going to happen with the dollar? What do you think people are going to be doing with the dollar here?
Well, I'm on Stel's camp, and I think it began by BOJ being the first, and especially if the yen takes out the highs where they did intervene, I think they have to coordinate something. And I actually think that a weaker dollar would give the Fed cover to continue raising rates in with their destructive policy, because that will make, like Steve said, inflation stickier here, and gives them cover to keep raising rates. So,
could you imagine if the dollar yen, I mean, if it break, this is a high from 1998, we would be trading at levels we hadn't seen since 1990. So 30 some odd years. If we start breaking
just a
above
reminder,
1.7.
Blake, today the pound traded at a level that has never
been seen.
Never been seen. And
Yeah.
I think
lower than when Soros took it down.
yes,
Yeah,
and
which is right here.
Yeah, it's an all-time low.
Okay.
Today's low is an all-time low. So we've been saying it since the end of last year. I think that this year has a lot in store for us, and I think we're nowhere near the end of what we're going to be seeing this year. This is not the normal average year of the last 15 years, 13, 14 years we've been around in the markets, right? And people should stop, in my opinion, if they want to stop bleeding money, they should stop thinking with the same mindset they had until 6 months ago. It's going to be destructive.
Yeah, who's been really good at talking about the dollar is Brent Johnson. He's been really spot on
for years,
because it is really it's become quite the wrecking ball in the global economy. The dollar has, and you guys, most of us know this. When periods of, we were talking about correlations in the markets and the strongest correlations out there. I think like Amanda was in her chat room saying, well, I hope no one was, long the pound Aussie, because I pulled up this chart and I'm like, holy cow, we extended 261% extension of our range right here. And, we've been looking at it, failing at 172. I did not expect it to drop all the way down here. I thought we would trade down lower, after rejecting there. But the fact is we, it is not moving with like a risk on, risk off. Correlations are not working. The only real correlation that's working right now, and that has been, is just stocks and the dollar. And if stocks get, hit, the dollar rallies, and vice versa. Obviously if the stock market, rallies, the dollar pulls back. So that is the strongest correlation out there. And I think that we have to, adhere to that and be very just sensitive to that as a whole. Now I want to ask you guys.
Be careful, Blake. Be careful, Blake, because you have to know which dollar you trade. Don't trade dollar yen.
Oh yeah,
because dollar yen has given up since the pandemic, and since especially April this year, it has completely given up on risk correlation. So it's been just trading with yield differentials.
I actually disagree. I disagree with that. I think it's trading exactly with dollars now. It's not
you say with the equity, with the risk correlation. If equity goes down, it's negative risk. But that does not work anymore. Until pre-pandemic, if equities went down, if risk went down, dollar yen invariably went down. And to this year, or since even half the pandemic, it's not working anymore.
Well, but let me say this: it has gone higher even as stocks have moved lower. And you're right, it's correlated with yields. I agree with that. But I think it's more of a dollar story now. The yen is moving with dollars, and as the euro goes down, the dollar yen goes higher, vice versa, right? So I think we can both agree on that. That it's really more of just a dollar move, or you could say it's a yield move at this stage. But you're right. I think that you can play certain currencies, and I think risk on is going to play better into commodity currencies. Whether it's the Aussie or whether it's the Kiwi or the Canadian, or even some of these emerging market currencies. I have to point out, and let's I should talk about this, because I did talk about it on the week ahead video, since we have Banxico and their rate decision on Thursday. Isn't it crazy? And I'm going to ask you, K-Man, specifically, because you and I trade. We're probably the more active peso traders in the ForexAnalytix community. By the way, if you guys don't know what our community looks like, this is you should have seen all the activity even from last night. This is since I've been up. I got here right there about an hour ago. Right?
Get involved, everyone.
This is what our chat room, this is just the general chat room, not the macro chat room, not the trades room, not the, and those are very active too, but this is just the general chat room. You can see in the last hour, that is everything that's happening here. And then obviously you got like the Flowonomics room, which is the macro chat room. But what I was saying is we were just talking about, in the ForexAnalytix community, or I'm sorry, on the week ahead video, I was talking about how the dollar Mexican peso has just not really responded to risk off, which has been kind of odd. So what do you make of that with Banxico meeting this week? Cayman, like I said, you and I trade the peso more than anybody, I think, in the chat room. So what are your thoughts?
I as people know, I went just out of my Euro mix shorts, but
and by the way, you've been short and like literally for the last month. So
no, I've been short since the start of the year, basically. But
great trade, by the way.
No, I think the Mexican peso is, thanks to its high interest rates, thanks to its proximity and being partially a manufacturer for the US, is gaining some and some far from my bet safety. Is keeping the traction versus non-dollar currencies. Call it carry trades, call it whatever, but it's the proximity to the US, I think, which is helping dollar mex. Which is helping the Mexican peso.
Right.
Dollar mex a bit higher, but we can understand that because there is a dollar factor in there. But yeah, versus the rest of the currencies, it's still doing very well. And contrary to stuff like Rand, for instance, which does not enjoy this kind of proximity to the US, which attracts all the money in the world right now.
Yeah, and look, I think that and I've talked a lot about this, especially with our we do that. We have a daily roundup and the morning edge that we do with our ForexAnalytix subscribers. Throughout the course of the day, I've talked a lot about the peso. I believe it's we're going to eventually be trading below well below 19, probably into the teens. I have a lot of longer term views just because I have friends, families that are from Mexico that we talk a lot about the pesos and where we kind of help guide them, if you will, over the course of the last decade or so. But I don't know. I think it's acting really well, and if we get some sort of move in risk towards the end of the year, I think that the dollar Mexican peso is going to trade well below 19. I think it's going to finally eventually break down. This week is going to be interesting. They do keep their rates on par with the Fed, and they as does the Bank of Canada as well. So I'll be looking for a little failure up here in the dollar mex right around these levels, and seeing if we can fail around the 2030 level, trade back down to 1970, 1980. But I think your Euro Mexican peso looks great, but I'm a little nervous being short the Euro down here. And I want to show you guys really quick. I know we just have a couple of minutes. Take a look at this lower trend line. We're obviously very oversold, divergent in relative strength in the Euro. So I think this is not an automatic, you got to be buying down here, but you definitely have to be a little bit more cautious. And I want to say one last thing that we talked about in the chat room. The daily sentiment index for the dollar came in at 97, and that's a very, very high reading. That's like the most extreme reading that we've gotten that I ever remember actually on the dollar, to be honest. Like the last, what's that?
Until today?
Yeah, I mean, today it should probably be about 96 or 97 again, I would assume, if things don't change between now and the end of the day. But what that means to me is it doesn't mean that you should automatically be shorting the dollar as a result, but we might get a consolidation here. I think if you are long dollars, you have to be a little careful and start treading very carefully. Doesn't mean that there's a reversal coming, but when you get extreme sentiment like this, it does tend to take some of the edge off as far as the bullish moves that we see. And you're seeing a pretty big reversal in the sterling. And I'm not saying that this is the end all be all, but man, that's a big bounce in the sterling right now. And
look at those two candles compared to the history of that chart.
Yeah, wow. It's nuts. And I can only imagine how many stops were going off in Asia, and not Asian stops. I'm talking about like European stops everywhere globally. And so Resh says, I remember Blake saying a year ago that Forex is going to go nuts. Yeah, well, currencies have gone nuts because interest rates are moving. And as long as the interest rates and interest rate expectations continue to move aggressively around the world, the FX market is going to be the only market to be, and the only place that you want to be dealing in the FX market is with ForexAnalytix and the trader funding program. So make sure you guys check both those out. Dale, I know you have an interview coming up, and I want to say, guys, team, thanks for being here. And K-Man, Ryan, you guys, even on a Sunday evening, you guys were in Asia, in the chat rooms. I know our community appreciates that. Steve, Stelios, and always appreciate your thoughts here. And Dale, of course, you too. So,
hey, it's like having foreign correspondents. You got have those guys out there on the front lines before we get in.
That's right.
Great job. So I mean, it would take me a lot of time to go through news material to hear how Ryan and K-Man and Steven Stel.
I love coming into I love coming into the room and just being able to go to the news and research room and going, okay, what happened? And then I can come in and say, hey, I missed some comments from the BOJ, what was said, and somebody in the chat room, whether it's one of our team members or some traders, will come in and say, oh yeah, this is what happened. So nice having a community like that. So
scouts.
Yep.
You guys are great forward observers. I think they called them in war.
There we go. That would be recon Marines.
Yeah.
Scout snipers. That's right.
All right, troops. All right. Thank you guys. And really, a lot of people haven't seen this action, haven't seen this in a while myself. It's great to be around experienced guys, to really kind of make sense of everything. And Tim Volance, welcome back to F.A.C.E. Great to have you back.
Good to be back.
Historic day, last 48 hours in the FX markets, very disorderly, kind of like crisis type of moves that, markets really can't manage. And well, maybe the markets can, but the world can't.
Yeah, it's that's probably a good way of putting it, to be honest. I think there's a big period of adjustment, I think, that's starting now. I think we're sort of finally getting a bit of a look at what the world's going to look like on the other side of this.
Right.
And the UK is going first. I think that's the message that I've been taking from it, is that the UK is the one to watch, because they're kind of recognizing that we can't try and do what we've been doing before and hope. It's like the old Einstein quote, isn't it? The definition of insanity. Is keep doing the same thing and hope for different results. And I think, I've been looking into what the plan is. The government published a big, long plan and everything else. And I completely understand the market reaction to this in terms of like, oh my God, it means change. It means new risks. It means all of these things. But is it the wrong thing for the economy, over a medium term, a few years? And obviously a lot of that depends. The answer to that question is often it depends, but it could be. That's the way
the bond vigilantes are not just here in the U.S., are they?
Oh, so, no. Yeah. I mean, it's fascinating. I mean, I've been through this whole period. For me has been just absolutely brilliant to learn from, because I imagine with a lot of other people as well. Interest rates didn't really matter much for a long period of time because they were so low. It was like, well, yeah, they moved, they stuck, that was it, and then what do you do? And now you're seeing the kind of, this the interest rate term premium is becoming something again as well, depending on how long do you want to hold that risk for, and how much are you going to demand to be compensated for holding the risk of buying these bonds in these different countries. And then you've got to factor in the currency risk. Is the government as well going to be there? Like for now, for example, Truss and Kwarting putting this plan forward. It's great. It's a great plan, I think. It's a great plan in terms of the big picture, not just what's going on now, but kind of addressing structural issues in the economy. And the UK is not alone in this. I think we're going to see a real battle in Europe over this shortly as well, when they talk about the fiscal side of things and the fiscal rules coming back into play that have obviously been suspended since COVID. But the UK is going first. They're making, sorry?
They've been suspended not just through COVID, but central planning of central banks.
Yeah,
right?
Yeah,
I mean, and that,
exactly.
we're talking 20 years now.
Yeah, I mean that's exactly it. We've been through this era, and I'm kind of like you look around the world and you see this populist kind of tendency. It's not like it's an uprising. I'm not going to get like political and all of that sort of side of things. Everything tends to be distorted by the media. It seems to me, for attention and clicks and everything. But it's just interesting. People aren't happy. That's the key message. People aren't happy with how the world is going for them and how economies are going domestically. You can make lots of arguments about the world being a better place overall, but that's not how a lot of people are experiencing it. We've had this whole period where we've been able to offshore all of these things to Asia, Eastern Europe, cheap labor, all of those things. And that kind of era seems to be over now. And everyone's sort of realizing that actually maybe we need to be doing more to be self-sufficient and improve our own economies. It's not just about globalization, although that is very beneficial as well. It's not a case of one or the other. It's just a case of redressing that balance. And that, I think, is really the big adjustment that we're coming to. And rebuilding economic capacity comes with a lot of government spending. And obviously from the West, we've exported so much of our economic capacity to the East that now taking some of that back is going to require more spending and higher interest rates. And I mean, even now, though, you're looking around at inflation versus interest rates. Interest rates are still pretty negative in real terms. They're starting to get more positive, but globally, that's the message.
Yeah, that's amazing. So the damage, even with negative rates, still real rates, makes you think if we, really had a positive rate environment, I don't think the structure of leverage will completely come down, don't you think?
Yeah, I mean, I think some of that structure. I think you've got to look as well at what the leverage is in. I mean, this is the other thing now. Is like you can argue now that what the UK government is now trying to do is they are trying to leverage up as well. Borrowing from the future, but they're trying to put it into whether it works or not is another question. But they're trying to put it into productive investment. And I mean, I've kind of characterized it. I think Taleb actually had a great quote the other day as well, talking about the kind of the broken models of the economies with low interest rates.
Yes.
It's kind of incentivized grift. It's incentivized all of these things that have made society unhappy with the kind of inequality of it all, and they kind of see it as a lack of opportunity. And I guess that it has been too much. It's not been necessarily a lack of opportunity, but it's been, again, that balance of power. There's been too much power in the holders of capital, because they've been able to get more capital, leverage it up, pump up the housing markets, start up like crypto companies that didn't really, all kinds of grift, basically, that never really had any economic value to the majority of people. It was just self-enrichment in many ways. And now it seems like that is actually starting to change. I mean, I'm not going to say it's going to be a complete reversal and that the world's suddenly going to be a wonderful, happy, equal place, because that's not how it works. But there's definitely a swing in the pendulum in that direction.
What are the market implications?
Well, this is what we're trying to figure out, isn't it? I think higher interest rates than we've had recently is definitely part of that. Definitely, without a doubt, because you're going to have higher inflation, and so savers are going to demand, in all their different guises, savers are going to demand higher interest rates to fund all of this and take on that risk, like we're seeing in the UK. So I think that's definitely one part of it. I do think that we'll probably see commodity prices, continue higher as well. Maybe not immediately. I mean, all of this as well, you've got to look at the different time horizons. I think at the moment we're still in a kind of period of realization, and things might get worse in that sense before they get better as well. The economy is looking a bit shaky globally. There's a lot of things going on, the financial sort of stability things. The dollar's so strong as well. So I think
what do you think, Tim? I've been raising the question since the BOJ actually did come in and try something, and it looks like they may be, if they blow through that, 145 level, 146 level, are they going to come in again? And is there a chance for something concerted by the central banks to get together and try and restore order into the FX markets, if not reverse direction in the dollar? I've been told by people it's easier to depreciate your currency than to support it.
It is exactly that. Exactly. So
I mean, isn't that a card that Paul could play that would bring some stability to financial markets and actually help him, because if the dollar weakens, things will get more expensive here in the US for him to continue on his tightening campaign.
Well, I mean, this is the other thing as well, because obviously the other side of the dollar strength is that it weakens corporate earnings in the US as well, which obviously then makes things trickier for companies.
They're crying about it now.
That's it. So if your goal as the Fed chair is to slow down the economy by sort of making financing costs expensive, making earnings slightly depreciate as well, and all of those sort of all of those difficulties in that way for the business level, as well as increasing borrowing costs and all of the other things that we know about, then a strong dollar is probably in your favor for trying to bring domestic inflation down.
Okay.
So I don't think that even the US.
So it's worth the global. So it's worth the global risk and the emerging markets.
Yeah. It has been until now. I think it's sort of, we are getting to the point now where things are looking shaky, and maybe I was just trying to look up the date there. I think it's the 12th of October, if I remember rightly. I think there's a finance minister's meeting, or at least there's a communication on the back of that's scheduled. Whether they do something unscheduled is another question. But I mean, I think that what will probably end up happening, rather than Powell saying anything, no, they won't announce it. It will be something along the line, some kind of word soup where they'll kind of just piece it all together and say, that they're concerned by developments in financial markets and what this means for financial stability and so on. And as always, you've got to read between the lines on what they mean by that.
Yeah, and Powell is, not just a domestic guy. Right. I mean, he's looking at the world too, and how failures other places could impact our financial system. So
of course,
it's a card to play, isn't it, for the Fed?
It is, but really, it's a Treasury decision as well. It's at a finance minister level. It's not necessarily the central bank, and we've seen already, even now the UK. You've got. And I mean, even in America, you look at California giving out the stimulus payments for inflation and the Inflation Relief Act. The fiscal and the monetary side, they're not coordinating at the moment.
Yeah.
They're pushing and pulling against each other. So there's a possibility that you could have Yellen come out and say, as part of this finance minister meeting that they've been talking and things are getting a bit dicey basically, and they're going to be looking into it, with a view to taking action if required, and hope that the market takes the action for them, and takes the hint. And then obviously it smooths the path, which ultimately is what they want. It's the sort of stability, because they still need to tighten. But obviously if they tighten too fast, then the risk is that everything collapses, and then they have to sort of untighten while inflation is still high, and we get that real stagflation scenario, which they're trying to avoid. So it's a tough balance at the moment. And I think that potentially we might get that maybe in the next sort of meeting or two. I think we'll be getting some of the data really coming through that's making them question the logic of continuing. And certainly by the beginning of next year, I think the idea that they'll stay high through all of 2023 will come into question. It will be challenged. Yeah.
Okay.
But looking around the world, it's fascinating times. I love it.
Just being, with this action in fiat kind of makes you, of course you could say, the dollar. But it makes you question all fiat, doesn't it? And almost makes you want to just, go play with your gold and silver coins.
You see, this is where I say it as if it's something out there, but I have quite unconventional opinions about that, because there's this idea of sound money that I disagree with entirely.
Okay.
Right? There's a reason we don't have the gold standard anymore.
Okay.
It broke because it wasn't flexible enough to take shocks, basically. If you really want to dumb it down, that's what it comes down to.
All right.
So obviously, yes, it's good to have gold and silver as, and maybe even Bitcoin. If we go down this kind of MMT route, there is, I think there's definitely a case for, I say MMT or deficit spending. I kind of lump them together sometimes. Maybe I shouldn't, but this kind of deficit spending route, maybe you can turn around and say, all right, it makes sense to put a little bit more money into these kind of outside money. Gold, silver, Bitcoin, that kind of thing. It makes sense to have some of that more in the portfolio than perhaps you would have done in previous years. But this idea that money isn't going to be sound anymore or any of those things, I just think is I don't think it's going to bear out. I really don't. Fiat currencies exist because they can be a release valve. That's why they're popular, because they are able to be flexible to allow the economy and the world to sort of keep on moving. To sort of, I think once we've got this level of life that we've got now, this stability of life in many ways that we've got compared to historically what our ancestors had, all of those things, we kind of forget how bad things could be if we didn't have these mechanisms, such as being able to just sort of print money out of thin air and, sort of smooth the effect over the next, 10, 20, 30 years, whatever it might be.
Okay. Yeah, so we need the central planning and we need a central bank. Are you worried that if we do have a severe recession, it sounds like, could happen, that the Fed's credibility, which is already weak, people start saying, get rid of the Fed?
I'm worried about them getting rid of the Fed's never got any credibility, Dale. The Fed's never got any credibility. It goes up and down, but it's never high at the end of the day, because they're there to sort of, and the same is often true of governments as well. They're there as shock absorbers. They're there to take the crap, basically. That is their main role. They have to make the tough decisions that we don't want to make. I think that the role of central planning is overestimated. That's probably the best way of putting that.
Okay. Well,
right. A lot of things just happen. Like for example, we'll talk the low inflation regime of the last 20 years. Everyone said that's because of central banks. Okay. They've taken a lot of credit for that, in providing this kind of stable, 2 decades that we've just lived through. But was it them, or was it the fact that China was coming up? We had that supply of cheap labor, cheap manufacturing. We had the fracking revolution, that came through. You had all the shale oil and gas, all of that cheap energy that came on the back of that. I think so. I think so. It's never one thing.
Yeah, the combination of that.
I just think that the global economy is just too complex for any central planners to ever capably really sort of control it or manipulate it to any great extent. The Fed's probably the closest, ultimately, but even in the end, the market can push them around and does.
Okay, so in this environment, and you're giving these messages, you have ideas how people can best get through this period that you think is ahead of us, that's so complex that all we could do is how do you get through this complexity, Tim?
You keep your time horizon short, I think, is the main piece of advice. That there is the main thing that you need to do. You just got to get in and out of the market. Don't think too far ahead. There's a lot of people. There's a lot of people that are talking about, very confidently about the future at the moment. And, I look, I think it was a couple of days ago, Stanley Druckenmiller, he's been in the market 45 years. And he said he's never been as uncertain about things as he is right now. He's never been served up this level of complexity in 45 years, and you think that you can just come in, do a couple of years, or, listen to some random guy on Twitter and he's going to tell you what to do and it's going to work. Maybe they'll get lucky, don't get me wrong, but that's not a good strategy. But it is a brilliant time to be in the markets, pay attention,
be tactical,
and be tactical. Yeah.
Didn't he say he can't? It's the first time he can't look out 6 months even.
Yes.
And see where we're going to be, and that's like their minimum time horizon for a lot of portfolio guys. They can't see out 6 months.
That's it.
Okay, so a different environment.
Very different environment, and obviously more fiscal heavy as well. I think that's the other thing that we're seeing. We've got the election coming up now, and we've got 2 big events politically. Politics are starting to creep into markets more and more, kind of obviously now. With the kind of the fiscal side of things. So we've got obviously the US elections coming up, and we've also got the Chinese Congress as well coming up. What's China's plan for the future going to be? I think that's a big question that people are looking at, because China's in real trouble, has been for, probably a good couple of years, to be honest. It's been going badly. But obviously Evergrande, when that happened, that was one of the big events, but it's just kind of got worse since. And there doesn't seem to be any real plan out of it. They've kind of chucked a few things around. We'll do common prosperity. Okay, well, that means you've got to give more people to money, more money to people so they can consume more, and you're going to create more of a consumption economy. but at the same time, they're cutting back on all of their sort of big companies that were creating a consumption economy and saying, no, you can't do that, you can't do this, not that kind of consumption, no. And the prosperity obviously that's being shared is going down because the economy is weakening and the housing market is decreasing in value as well, which is where a lot of people's savings and investments are. So everyone's pretty depressed. It's not good.
That's a great segue, because there are a lot of people talking about pensions and the upcoming pension crisis, because they had a mandate of 7-8% a year, and with repression of rates, they went into alternative investments and higher risk investments than they should have. And with this break, and the insurance is so weak to cover any pension problem, that will have to be a bailout. Do you think that's a possibility, that we're going to have more bailouts and there'll be more on the social level? They certainly won't be banks again, will they?
No, I don't think it'll be banks again. Although that is something else that I'm keeping an eye on, is the kind of regulatory relief as well in the US. But I'll come back to that, because I think the social side of things is really interesting, because that's where I see that we're going to see the reform, as I mentioned at the beginning. That's where the money is going to flow to. It's just where in the world do people, do investors and savers feel confident putting their money? Obviously, I think we've seen a lot of flows from west to east over the past couple of decades, because that's been where a lot of the growth has been. And maybe now, as the kind of Western population ages, and Asian populations as well, the demographics aren't looking particularly good for growth either in a lot of the traditional, South Korea, Japan. Well, Japan's been the same for a while, but, South Korea and China especially, the demographics there are looking pretty awful. So do we start seeing that now, where savers need to start drawing down on those savings, and they need to go into productive investments that are going to generate growth, going to generate, improvements? Maybe
so
they come
will
back
they be
to the
like
West
tax
more.
shelters, maybe? Where
investment
I heard a
zones
guy
like we're
say,
doing in the
Tim,
UK.
that we're not going to solve an inflation problem by tightening. If we have housing inflation, create incentives for more housing.
I mean, I do
government incentives.
I do kind of agree with that, but I already think that I think that it's a two-pronged problem. Okay, the housing market isn't necessarily undersupplied. It's more the case that low interest rates have allowed the sort of speculators to move in and price people out. That's the problem. The way that I see it, the housing became an investment because other things weren't good investments.
Right.
So
when BlackRock came in and scooped
and
them up after 2008, and they have
and it's been going on ever since. And it's not just them. It's even private individuals as well. We've seen them all.
Will they disgorge? Yeah.
Will they disgorge of those things? I don't know. I don't know whether they will or not. I think the thing is, if you have higher interest rates, at least there's a decision to make. At least there is a decision to make. And I do think that we're probably at the beginning of that transition to higher interest rates for a while. Not necessarily that they're going to keep on going up, but they're just not going to go back down to zero again for a while. And we're going to have a period of, above 2% inflation. I've seen a lot of people talking about them adjusting the inflation targets as well, that maybe, we'll end up settling on 3 or 4% as the correct level of inflation for the circumstances. I don't really have an opinion on that. If they do, then they will, then they do, but I don't really think there's any particular way to predict that with any confidence. So it's definitely something to sort of to look for all of those things. And also the QT side of it as well. They've really been struggling, the Fed, to reduce the balance sheet, because who's going to come in and buy all of the sort of buy all their assets, all their treasuries, the bills?
Who is?
This is it. This is it. Who's going to buy them all? Especially if we're in a period where people are actually drawing down on them. Because again, over in Asia, for example, there's a lot of energy importing going on, and they're having to draw down on savings. The dollar as well is kind of wrecking things a bit. Bonds.
They need to turn the
value.
dollar. It's a good Band-Aid. Central banks get together and turn the dollar. It's a Band-Aid for a while, and there's a lot of tactical things you could do with that if that happens. Right?
Absolutely, yeah. I think that will have to come at some point, whether that's shortly or whether they wait as long as possible until things really start breaking.
They better get going.
They better get going. Yeah, they're going to.
They better get going, buddy. And you know what? The going doesn't get better than to have a conversation with you. And you're unconventional in ways being, very conventional. I think it's become popular to be so unconventional that just making sense, is underappreciated. So,
Thank you, mate. Appreciate that.
You really crystallize things for our community, Tim, and I think you're a great speaker. If people want to hear more of your stuff, go ahead. What do we have here?
Well, that's exactly what I was about to say, that that's exactly what we try and do, is we try and simplify things down without getting too far into the kind of the economic speak, shall we say, that it seems like basically another language most of the time. We just try and make things sort of, make them make sense, so that's the idea. It's not to give you every single answer and make you understand it and you become an economic genius. It's just to apply context, show you where to go to think a bit more deeply about things, and just basically some context for the UK, for the market overall. And this is what I've done about the UK here. We've just been having a bit of fun with it, to be honest, because there's a real overreaction, I think, in the UK, and I think we'll see more of that in Europe as well. And so that's really what today's piece is about. But obviously, we do this every day. We send out articles for free. Okay, obviously, we've got the premium service as well, where you can come into Discord and sort of be around other like-minded people and sort of try and generate ideas and again just get more perspective on the world and everything that's going on, away from the media kind of circus, I guess. I was trying to think of a more polite word, but I really can't.
Tim, I actually feel the effect of coming in and seeing the ranges and currencies. Kind of felt like I was in a crisis, high alert, adrenaline type state. And after talking to you, it calmed me down.
Good. Maybe I can have a bit of
really good.
a bit of therapy as a psychic.
Next time we do this, I'll lay down on a couch. Anyway, you're a great economic psychiatrist, man. So
excellent. I'll add it to the resume.
Yeah, and really thank you for your giving spirit to share your views with us. And
thanks for having me on, buddy.
I recommend people follow these guys at Macrodesiac. And Tim, rooting for you. Good luck.
Thanks,
in
being
tactical. And I'll get in touch. We'll talk again this winter.
Fantastic. Yeah, look forward to that.
Winter is coming, right, buddy?
Yeah, it's not far away, mate. That's going to be another thing with the whole energy situation as well, isn't it? I'll tell you what, just one thing, Dale, one really quick final thing. Okay, just here, the British gas price. You remember these gas prices that were out of control in Europe and everything else?
Right.
Well, they're now down below the level that they were capped at.
Right.
All right. So that's sort of, you've had that spike up, and we're now back down to the normal level. So it's actually not gonna cost anything if they stay around these kind of levels. Obviously, we'll see if that's the case as we go through the winter. But I found that really interesting. You never hear about this side of it, do you? You never hear about the side where actually it's gone back to something approaching normal again. It's always crisis.
Yeah. Well, I saw that chart and I'm going, it's no one's talking about it. And you're like a watchman for all the hype. So if you don't want to get hyped out,
I tell you, Dale, that's where there's edge. At the moment, the way that you've got sound bites sort of economics going on everywhere.
Yeah.
If you can just look at things and find the bullshit, if you'll pardon my French.
Yeah.
But if you just find it and fade it, once it becomes so obvious that this just can't continue, like these gas prices. I'm not suggesting people start speculating in natural,
nice 3 drives to the top. I believe in 3s being completion. Anyway, I really, Tim, great. I'll be in touch with you, and have a great fall trading season, being tactical, and you have a great mission of simplifying really an insane world of economic YouTubers, right? Like me.
Yeah. Mate, we're all on the same mission, trying to make sense of it all.
Thank you, Tim.
Cheers,
all right,
buddy.
everybody. All right, everyone. You could join the team in 15 minutes on the Morning Edge. If you're not in that room, you're missing things. And I rest my case. Don't just count your pips, count your blessings, especially be tactical. I think that's really the takeaway from Tim today. Shorten your time horizon, like to 15 minutes. All right, everyone. See you for Turnaround Tuesday tomorrow. You're very welcome. David, Laura, Ingmar, See you guys tomorrow. Thanks again, Tim Valance.